Most traders don't fail because of strategy. They fail because they can't follow one. And I know this because I did the exact same thing. Jumping between strategies, overtrading, and convincing myself I was only one tweak away from profitability. But the truth is, I didn't turn profitable by finding a new strategy, a new indicator, or taking better setups. I found profitability when I started following all of my rules. And in this video, I'm going to give you the exact rules that changed my trading for the better, that made me profitable. It's not motivation and it's not theory. It's the actual rules that made me become consistent. Because if you're not profitable right now, which I can imagine a lot of you guys are who are watching this video, it's not your strategy that is keeping you stuck. It's how you're operating. So rule number one, and this is the rule that most traders hate, and that is I only take one trade per day. No second chances, no revenge trading, and no more. I just need to take this trade to make back my loss. Because I used to sit there after a loss, staring at the charts, watching it like it owed me money. And the worst part is that the best trades always came after my first loss, after I already ruined my day. So a lot of you guys, you take way more than one trade per day. And I get it, because you feel like if you're trading more, you'll make more money. But in reality, the more times you trade, the more money you have at risk. So the more trades you're taking, the more exposure you have to the market. It's like going to the casino and saying, I'll just play one more hand to try and make all my money back. And we always know how that ends up. So when I did limit myself to just one trade per day, I stopped trading emotionally. I had to start trading intentionally. And it made me follow a lot of my other rules. Because if I was only allowed one trade per day, I'm now no longer allowed to revenge trade. I'm now no longer allowed to overtrade, and I now have to search for an A+ setup every day instead of taking random low quality trades. And rule number two, I started accepting my losses. Because most of you guys, you don't lose money because of bad entries or bad trades. You lose money because you refuse to be wrong. You refuse to lose money on that trade. You refuse to get your ego and confidence kicked. And that's when I did it myself, when I started moving my stop losses just a little bit further down so I could let the trade breathe. And then as it came further down, I moved the stop loss even more and more and more and more until that one singular trade that could have been a small losing trade ended up blowing the entire account. And that's exactly the same as touching a hot stove, but then refusing to move your hand and letting it burn. It's the same thing with your trades. You're letting that one little mistake or little losing trade turn into something massive, something that completely blows your accounts. And I don't try to avoid losses anymore. Losses are part of the game. Losses are expected, but you need to know how to control them. And that's where using rule one, where you only trade once per day. If you take that loss, that's it. You've taken a loss, go and do something else for the rest of the day. I lost a trade this morning. I'm making this video for you guys. I'm not going to sit back on the charts and try and trade again until Monday morning. And moving on to rule three, only trade when the conditions are perfect. So if the setup isn't clean, I don't trade. So there's no forcing trades, no, this looks kind of good, I'll just try and take it, and definitely no boredom trades. I only trade when the conditions of the market are perfect for my strategy. If you don't know what conditions are perfect for your strategy, then you do have a slight strategy issue here, and you need to go back, figure out when is best for you to trade, and then stick to it. So especially for March, the price action has been absolutely terrible. So I've taken very little trades this month, but on a month where the price action is a lot better, I'll probably be taking one trade per day. This month, I may have only been taking around 2 or 3 per week. And also going back, when I started trading, just because I sat at my trading desk behind me, I felt that I needed to trade because I'm sat here, I need to try and make money now. And that's when I started trading terrible price action, terrible market conditions, when instead I needed to fix that And if the conditions weren't right, I need to walk away, because I would rather have no money exposed to the market at risk than risking 1-2% on a trade which has a very low chance of hitting take profit. And it's exactly the same as a sniper taking a shot every 5 seconds instead of waiting for the one clean moment to take the shot instead. So your edge isn't how much you trade. Your edge is how selective you are with your trades. And rule number 4, this is where a lot of you detach mentally. I had to detach myself from the money. I had to stop seeing trades as money and start seeing them as execution. Because when every trade feels like money, that's when you hesitate, that's when you panic, that's when you close winners early, and that's when you hold on to losers. You're too attached to the money. And when I finally detached myself from the money, I started following my plan better. And this can be as simple as just not looking at your P&L, just looking at things as percentages. Or when you open a trade, close MetaTrader, let the trade play out on TradingView, where there are no monetary values attached to the trade. You're purely looking where your stop loss is, your entry is, and your take profit is. And there's no monetary values for you to get distracted from the real trading. And if every time you are entering a trade and you suddenly panic because it's going into a loss, your position size is too big. And it's as simple as that. You need to prepare yourself before every trade. I'm gonna lose $1,000 this trade. Am I happy to lose that amount? If the answer is no, your position size is too big. Scale it down. As soon as you scale the position size down, take the trade, go on to TradingView. Don't look at your P&L. You can look at your P&L at the end of the week. You can look at your P&L at the end of the month, but not whilst you're in that trade. And rule number 5, I need to follow my rules, even after a win. You might be thinking to yourself, yeah, of course, we're gonna follow our rules. But a lot of you, after a win, will relax. You will break a few more of your rules. You will take an extra trade, because say you made $2,000 on the day. You might see another low quality trade coming up, but you feel good about yourself. You think that this trade's gonna win. So what do? You enter another trade and you might risk $1,000. It's a low quality, it doesn't really follow your structure, but you wanna try and make another 1 or 2K on top of what you've made already. So you risk that 1K. That trade then loses. You are now only up 1K for the day when you was up 2. So now what are you gonna do? Are you gonna sit there and take that? Of course you're not. You feel like you've been robbed of $1,000. So you're gonna enter another trade and it's gonna spiral out of control. So even after a win, when your confidence is high, when your ego is big, you need to either walk away, or if you are thinking of taking another trade, which I highly don't recommend doing, that it fits your plan, that it fits your rules, and it fits your risk. Because it's exactly the same going to a casino, winning some money, and then being like, right, I'm gonna gamble all of that money to try and make some more, just because you feel lucky now, when that shouldn't be the case. You need to protect your capital as a top priority. And discipline isn't tested when you're losing, because the majority of the time, it's easier to walk away after a loss, after a couple of losses, than it is to walk away after a couple of decent wins. So if you're watching this and you're thinking to yourself, yeah, I have done one of these, this is why you're stuck. And my final rule is consistency over intensity. So what do I mean by this? I stopped trying to have big days and I just focused on consistent ones. So instead of trying to find the lottery winning trade, the 1 to 10, the 1 to 20 risk to reward trade that comes up very rarely, I just started being consistent 1 to 1, 1 to 2, following my plan, following my rules, take the loss, wait for the next day, trade again. Because the best part about consistency is that it compounds. But emotional trading, that resets you back to 0. Because answer me this, would you rather have 50 winning trades of a 1 to 2 risk to reward, or would you rather have 49 losses and 1 trade that hit a 1 to 20 risk to reward? Of course you would take the consistency. Would you be able to sit through that many losses to try and find that big winning trade? Probably not. You would have given up with trading and you would have spent all of your capital. So slow it down, get consistent, because small wins do compound. That is the most important thing that you need to realize in trading. It's not about that one lottery winning trade. It's about the consistency. It's about being able to generate income over a long period of time. There's a lot of you guys watching. Yeah, you might be trading as a side hustle at the moment, but you probably want to do this full time. And you won't be able to do this full time if you're trading like a gambler, if you're trading like it's the lottery. You need to trade with consistency. So look, none of these rules are complicated, but that's the problem. They're so simple, they're hard to follow. And if you can actually stick to these rules, I promise you, your results will change, because I stuck to them and it turned me profitable, and I managed to quit my job, go day trading full time, and live here in Dubai, just from following these simple rules. So it's not what you know, it's not trying to find the next best thing. It's purely about consistency in following these rules. So if I was you, I would go back to the start of this video and I would note everything down, have these in front of you when you start trading either today or when you start trading on Monday morning, because this is how you're going to fix your trading. And if you feel like you need a little bit more help with your psychology, with the mental side of trading, with your risk management, I have a completely free to join Telegram group purely based on the trading psychology. So if you want to join that group, there's a link in the description. That'll take you to my website. There's a few things on there for you guys to use as well, such as my trading playbook, if you want to book a one-on-one call, a trading journal, and a trading plan builder, along with the link to the free Telegram group. So I hope to see you guys using this, because it is all there for you guys to have access to. So thank you very much for watching this video. If you enjoyed it, please feel free to like and subscribe, and I'll see you Monday in a new video.